Hello, everyone. Welcome to a market update. I am in the U.S. at the moment. Got here on Monday U.S. time, um, and I'm here until December 1st, and then I leave and I return back to Australia on December 3rd. Here to visit my mother. I'm in lovely Phoenix. It is a bit cooler now and raining a lot, actually, which is a departure from what I'm normally experiencing when I'm here, which is super duper hot and dry weather. So it's a little bit nice to get see some rain falling in Phoenix. It's unusual. I don't think I've ever been here when it's actually been these rainy conditions. So it's quite a, as I said, a departure from the normal. Top three things today are going to be VIX or volatility, to be really more broad on VIX, but volatility. I'm going to talk about the volatility indexes. Monthly quad 4, which we're going to be experiencing in December, and the market seems to already be discounting that. And then finally, a look ahead to 2026 and helping you to understand what's going on in the markets right now and to manage behavior and expectations, because this is one of the biggest parts about watching this stuff on a regular basis is we can often get pushed and pulled around by the feeling of euphoria when markets are ripping, and of course the feeling of despair when markets are correcting. So I'm going to give you some perspective on how to deal with that. First thing, though, let's talk about volatility. So on the screen, I've got the Russell Volatility Index. I'm going to show you the VIX, and I'm going to show you the NASDAQ as well. But one of the things I wanted to just quickly highlight is volatility up until this week was actually reasonably, I'm not going to say benign, but it was trending in the right direction. It was trending down. And what has begun to happen is the market has begun to discount that we are going to be in a quad 4 environment for the month of December, and volatility spiked. The first thing to have broken down really was the small cap space. So the Russell index, which is an index of 2,000 small companies in the market, started to break down, and volatility started to spike. So that's just been it's provided downward pressure on the Russell index, and it's provided downward pressure on small cap stocks. The next index to quickly look at is the NASDAQ Volatility Index. Now, this is a really interesting one because NASDAQ Vol was kind of hovering around the 20s, which for that index is investable, bordering on chop bucket. But it, as you can see, it started to trend upward in the middle of November and has really spiked in the last day. Now, this is really interesting because last night we had NVIDIA report earnings. They were one of the final ones of the big tech companies to report earnings. Had a bumper earnings report. It was beat expectations in terms of profit, in terms of earnings per share. And one of the issues now with NVIDIA is that they face some really tough comps. So come quarter one of 2026, they're going to have to try to comp what they did in quarter one of 2025. And it's going to be really difficult for them to continue to do that because a lot of demand and other stuff has been brought forward with this whole AI trade going on. So NVIDIA might have a little bit of a tougher road to hoe going forward. Still a great company, and I think there's still a lot of runway for them and other tech companies. In the short term, though, the market has had a little bit of a moment of going, well, we're entering a period right now in December where some of the metrics aren't great, and volatility has spiked, as you can see. And there's other tech leaders that are also currently struggling at the moment. So to give an example of that, Meta, Netflix, Tesla, even though it's not really a tech company, but Tesla and Oracle are all in bearish bear markets. So their stock prices are falling. The leadership right now in that whole Mag 7 or the FANGs or whatever you want to call it, those, the big tech companies that seem to attract a lot of capital in markets and are driving a lot of the returns at the moment as well. The leaders are Apple, Amazon, Google, and NVIDIA. Now it'll be interesting to see. NVIDIA may be breaking down here, which is something that is quite interesting. I don't know if I've got. Yes, I can put up an NVIDIA chart real quick. NVIDIA overnight After the earnings report, its share price spiked up to about 196, 197. It might have even gone to 198. But as you can see here, and this chart only reflects what happens during trading hours. So what I've just told you is what I observed last night after market hours and after the earnings report. But what you can see here is Nvidia, despite a really good earnings report, is getting is selling off today, which is quite interesting because normally, when you get great earnings and you have those things happening, that's a tailwind to a stock, and you wouldn't necessarily expect it to go up. So this is a little bit of concern because Nvidia now will probably enter that bearish phase, and we'll see if it drags on all the other tech companies. And if Nvidia starts to, I have some lines on this chart. I don't know if you can see them, but this little white line here is a very short-term metric. It's sort of a 7 or 8 day look back. Then there's a red line, which is kind of a 3 week look back, and then this yellow line down here is 3 months. But what will often happen when I'm looking at charts is when a stock breaks down below this red line, it can signal a trend change, and it's right now sort of kissing that line, as it were. So it'll be interesting just to observe what NVIDIA does over the next couple of weeks. The low end of its range, according to the hedge eye metrics that I get, is 182. So if Nvidia breaks down below 182 and stays there, it's probably going to go into a bear market, and that's not going to be good for tech stocks and the remainder of the tech complex. And as you can see, we're looking at, so these are kind of your mag. What is this? 1, 2, 3, 4, 5, 6, 7, 8, 9. The mag 9, let's call it, because Oracle's in there and Tesla's in there. But you can see there's a lot of red right now sitting on those stocks. We've got a couple of other things to note, I suppose, is that the Bitcoin complex and the whole cryptocurrency complex, that started to crash well before December. That was a great sign that we're entering a quad 4 in December as well, because usually, not usually, sorry, the only quad where Bitcoin and the cryptocurrencies really do poorly is quad 4. They were a very early marker to the fact that we were going to be entering a quad 4 environment. So things like your Bitcoins and stuff are down, I think, about 30%, probably a little bit more from their highs, which may present a buying opportunity. I don't know. They do very well in the quad 1 environment. So I think we'll have to wait and see what happens over that period of time. Okay, so that's a little bit of discussion about markets. I suppose I didn't touch on the VIX volatility index. VIX has spiked now, and it just, watching it today, like this is a huge range, this bar here that I'm highlighting, this green bar, where you can see the low was 1928. That probably happened at some point this morning within the first hour of trading, and then vol has just gone up ever since. We've gone to a high today of 28, and it's sitting around 27 right now. This is not good. This is the uninvestable bucket, and if vol stays here or sort of continues to trend higher, then again, this is going to be a very cautionary time in markets where we're going to want to be sitting on a bit more cash or cash equivalents, other defensive type of investments. This is in the Interactive Brokers accounts. For those of you on Hub, my hands are a little bit tied there because I can't trade Hub 24 accounts during U.S. market hours because they only allow me to put in there's 2 order times per day, I think, 10 a.m. and then 3 p.m. So all that means is that I will likely do very little in the Hub 24 accounts. I might, around the edges, take a few positions off, raise a little bit of cash, but I'm going to be more looking for, in the Hub accounts, to be adding to stuff if we get a little bit of a market correction. With the Interactive Brokers accounts, it's a little bit easier because I can trade in real time and live, so I can maneuver those just a little bit more. Either way, let's talk behaviors for a moment. And actually, before I talk behavior, let's look at this table right here. So here we are, finishing off November with a quad 3. Already market is discounting quad 4 in December. That could, and I've seen this before. We've had Decembers before. Excuse me, I've got a little bit of a cold. Picked it up on the plane. I'm a couple days in and feeling a lot better, which is good. Quad 4 environments, we could see a 5 to 10% correction, which isn't the end of the world, and it's not a huge deal. It's a buying opportunity, most likely, and a time when I'll be allocating more cash, or reallocating cash. And what I want to highlight, though, on this table here in the monthly quad setup is that, and I reiterate this, nothing has changed for 2026. At this point, we still have a quad 1 environment for most of the first half of 2026. There are 4 quad 1s in there, and quad 1 is known as Goldilocks. And what that means is everything's going to go up. That's what happens in a quad 1. It is one of the best investing environments, and it's where everybody looks like a genius because they make a lot of money. And so we just have to get through December, and then we get into 2026. There's a number of tailwinds, which I don't have a lot of time to go through. Number of tailwinds, including some tax breaks that are coming through. There's been a lot of really good stuff happening on the trade front, with U.S. Doing a bunch of trade deals, and a lot of now capital flowing back into the U.S. from countries like Saudi Arabia. And I'm trying to think, China, I think, is also investing some money back into the U.S. But in any case, we're seeing some really good things happening around that. So Donald Trump has played the whole tariff game exceptionally well, even though a lot of the things that he's done have caused a little bit of volatility in markets. They are long-term going to really benefit the American system, and probably long deserved too. America has, I think, for a very long time funded a lot of the world's economies by being a massive consumer, and now we're going to see, I think, some much needed reversal of that, where money and capital flow back into the U.S. So that's a good thing, I think. Anyway, just to wrap that up, though, the monthly quads, quad 1, a quad 3 in March, which again, quad 3 is still a great investing environment for a number of things, including secular growth and large cap growth and tech, and particularly tech and growth. And then just bouncing between quad 1 and 2 up until sort of July, where we have another quad 3 and then a quad 2. So what that means is, and from a behavioral point of view, I used the B word a minute ago, I just want to have everybody, if you're nervous, you shouldn't be, take a deep breath if you are, and just recognize that we do go through periods of cycles in markets. And this December is going to be one of those moments where we are going to see, and we're already seeing it because volatility has gone roof, we're seeing a correction in markets. How deep and how much of a correction we get remains to be seen. The way, again, I'm going to be playing it and have been playing it is I've reduced a lot of exposure. Again, this is an IB. I've reduced exposure to tech and a few other things, reallocated some capital to some other positions. Again, as I've already mentioned with Hub, I can't really do that. If you are a Hub user or you have a Hub account, let me know if you want to have a chat about that and how that should be managed or played. I'm happy to have that conversation, probably better when I get back from my trip early December. But in any case, that's what's happening in markets. So looking forward to 2026, I see, and this is not just me, it's Hedgeye sees that we're going to have a really great investing environment. And so there really, in my view, is nothing to be overtly concerned about. With that, I'm going to say have a great rest of the week. Enjoy your weekend. And for those of you who do have any questions about anything I've said in this update, please don't hesitate to email me if I need to do an update video or something like that. Happy to do that. I will continue to be monitoring markets. Obviously, we have a couple of short, I think next week's going to be a short week. We have the Thanksgiving holiday coming up, and then I believe there's another shorter day, like a half day of trading in there. So next week will be a bit of a short week. It should also be a lower volume week, just because people and traders will be going on holiday. So it should quiet down a little bit next week, but we'll see. We'll just have to see. All right. With that being said, again, have a great weekend, and I will update you again next week with a further market update. Take care.